Robschild, no investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said millionaires don't need astrologers, but billionaires do, and so we begin. Today is Tuesday, July 30th, 2024, and today's episode, low earnings don't surprise me. Theme of the day, nothing really matters until Friday's unemployment number. Of course, we have to look out for anything that might shake things around on Wednesday tomorrow for the Fed funds rate decision is made in the commentary, and so things can happen off of that. We have Meta earnings after the close, Thursday Amazon earnings after the close, so some pretty big pop stocks with a lot of weight in indices coming out with earnings. We can shake things up, but really nothing really matters from a bigger macro view until Friday with the unemployment. It's expected to be the same as it was for, I believe, the last two ratings of this, the last 2 months of this, to be at 4.1%. So we'll see if that happens. I do highly suspect that if this number is higher than that, things will really start to get shaken up, and I would expect a good bid for bonds, treasury bonds, which is my biggest holding right now, but we'll see how that all works out. Daily reminder again, 2-year 10-year yield curve inversion is past its second birthday. I believe this has never happened before in history, which could mean that we are headed into the worst depression of all history. I don't know, we'll see. For now, the market is very, as bearish as it's been getting very recently. We're very close to all-time highs. This has been basically more or less a 5% correction so far in this little trend going downwards, as I've been noting. Lower low, lower high, lower low, lower high. And today, we tried to get a little higher and we couldn't do it. And so, it does seem like it wants to head down to whatever trend lines you can figure out. How low will it go? I don't know. Again, considering seasonality, considering the fact that October is often a pretty weak month, and the VIX future curve shows very high volatility priced in already there, along with the elections coming up and the cuts starting in September. It's all the stars are aligning for the markets to be cracking here. But in the meantime, junk bonds still don't care. I keep bringing this up because it's the only thing that really matters right now. Again, back in April, I thought that was it. It was going to crack, and now we're just going sideways. People are happy to be buying junk bonds right now for whatever reason. I'm not buying them because I think there deserves to be more risk priced in, but we'll see. Depending on how you draw the lines and which exact point you get, I redrew these lines to try to hit the exact points of this very much longer term head and shoulders pattern that had started back in 2022 or so. It's not showing that right now, but basically we recently just hit that line again today for what seems to be around the 7th time. And if you do a price count, this could this be it? Could this be the crack that sends TLT way higher? Again, the stars seem to be aligning for this. And another thing I wanted to mention is the steepness of this line is a lot flatter than a lot of other trend lines that have been in this market for a while. And the flatter a trend line is, the weaker it is. And so cracking through it, and every knock that we do also weakens it. Every time you hit it, it makes it weaker and weaker. And we keep hitting it. It obviously wants to break through. It has been wanting to break through for a long time, and so I think that bonds are about to get a pretty large bid here. But again, no investment advice from me on this show. All of your decisions are your own when it comes to asset management or asset non-management. If you choose to have things managed professionally, or don't do it at all. But I imagine if you are watching this, you have some interest in it. Anyway, I digress. This is the yield of the 30-year bond. very similar chart. This is a what is this? Oh, this shows a few Head and Shoulders, basically patterns that, you know, TLT is, I wanted to say TLT is sort of the more traded thing that people use for the value of treasury bonds. I think more than anything else, I think it probably has more control over the value of the treasury bond market than most other entities, and so using that chart I think is very useful for figuring out any chart patterns. But the bigger view, from an institutional standpoint, from an international standpoint, you have to take a look at the yield, the actual yield, and we don't see the same super large long term Head and Shoulders top like we do in TLT. That line is quite a bit lower. It would be where the 30-year bond gets to about 4.3%. So if we crack through 4.3%, that could really send the longer term yields much lower, at a very fast rate, I would imagine. Sometimes interest rates are boring and sometimes they get really exciting, and I think we're headed into an exciting time. As you can see just from this chart, where yields are on the 30-year bond right now, 4.4%, we have basically this has been the midpoint basically since looks like toward August, I guess, September, of 2023. So for a year now, basically, we popped way up, we went down, and we're consolidating tighter and tighter here, and so it is getting interesting. But if you look, in the past, there are times where it gets very interesting. 2021 to 2023, we went from a rate of, what is this, 1.6% all the way up to over, almost 4.5%. That was an exciting time. Previously, with the headed into the COVID crash. Oh, sorry about my charting here. We had gone from 2.24 to, I believe the bottom was 0.7%. Very dramatic drop. And so for about a year now, things have been getting pretty boring, and it seems to me that it wants to crack out of here. And I'm going to guess it's going to crack to the downside, benefiting the price of bonds. But who am I? It's not like I'm the guy with the crystal ball. XHB Home Builder Index. This is a leading indicator. It continues to amaze me. This is one of the few indices right now that is currently at an all-time high, a closing all-time high. This had just recently made sort of a bull flag and broke out of it, and it just keeps going up. Apparently, people think that home builders are going to do well here. I'm not sure why. My understanding is that from what I've heard in the news, is that new homes it's harder and harder to sell them. Rates are high. Nobody has any money. I can't make sense of this very much, but whatever. Like I said, the other markets, everybody else is in fear mode. And CNN Business, Fear and Greed Index, we were petering yesterday on fear, and we were in the neutral zone. We broke into fear today. I wanted to note, just bring up some more of the fear. In addition to the S&P 500, currently in a downtrend, on a daily time frame, right? Lower high, lower low, lower high, lower low, lower high. But adding to that instability, we had Microsoft come out with earnings just after the bell today. Obviously, didn't do so well, down 5%. Notably, this is over a $3 trillion market cap company. You'd need $3 trillion to purchase ownership of this whole company, with a dividend yield of 0.7% and a PE ratio of almost 37. The company will probably continue to make more money, generally speaking, moving into the future. But how much, that PE ratio assumes just so much more growth than you know, it's priced like it's an ARC stock at this point. 36. That's not a conservative valuation. That is an expensive valuation. And this is again why I keep beating the drum and saying how overpriced markets are. You know, moving on to looking at Nvidia, I talk about that company all the time. We were down today over 7%, and after hours it looks like AMD came out with decent earnings, I think, and so that gives like hope for the semiconductor industry. So aftermarket up 4%. Again, with these ridiculous valuations, these companies are pricing like they're, you know, penny stocks. It's getting really ridiculous. But anyway, SMH, again, this was the white whale with the two big red candles that Gareth Soloway was talking about. He said he never saw one before in his career, and how unbelievably bearish that is. And yeah, that has been correct so far. This has been going straight down, and it looks like in the after hours we are getting a little bit of a bounce, but nothing looking very exciting here as far as looking like a bottom, at least not to my eye. But I have no idea where this will go from here, and I'm not getting involved with it at the moment. That's all I have for you for today's show. Hope you enjoyed. Thank you for watching. Robschild.